Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me is Shrishti Sharma. And this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of research or on the back of technicals. But first up, let's take a quick check on the market. Shrishti, market soaring away in trade. Nifty hit its another record high. In fact, the bit of weakness that we saw coming in the bank Nifty and broader markets, a bit of a jitter that was coming in the first half, that has also ebbed away now.
Well, certainly, Ankita, good moves coming in for the markets for today, and indeed all-time high levels, and even a good push coming in for the bank Nifty as well. 140 points gain is what we are seeing right now. But on the back of the news flow, indeed, Maruti Suzuki is one such stock that is holding on to the top gainers list for the company right now, where the UP government has actually gone ahead and waived off the registration fees. All in all, for Maruti Suzuki, a big positive and a booster for the company. Other than that, the IT seem to be a little bit on the back footing. LTIMindtree is the top losers on the Nifty 50. But on the flip side, it's the day of the autos, because not just Maruti Suzuki, if you look at M&M, Hero MotoCorp, and even Eicher Motors, they are seen to be gaining for Nifty 50 right now. But on the bottom of your screen, viewers, you can also see the AMFI data that is out, where mutual fund industry net outflows have been seen at 43,637 crores, and that's the latest number that we have right now. We will watch out for more details on this particular news flow, but that's the first number that we have on the AMFI data for the month of June. That was about the markets, Ankita, but for now, the breadth of the market is also quite even, Steven. So we have to wait and watch that where the ending comes for today's trading session.
Absolutely, Shrishti. So without further ado, let's get started with all the stocks that are making headlines today. And for that, we are joined by Osho Krishan, who's a Senior Analyst, Technical and Derivative Research from Angel One. And on our research team, we have Snehi and Jinay joining us. Hi, welcome all of you to Market Fatafat. So without further delay, let's get started with all the stocks. And Shrishti, like you mentioned, yes, Maruti Suzuki is in focus today. In fact, it is the top Nifty gainer, and because of the news that has come in, all the auto stocks are in focus today. In fact, it's trading with gains of 7% right now. Well, the news is that the fact that the stock is surging after the state of Uttar Pradesh has waived registration fees on the hybrid cars, and the state is offering a 100% waiver on registration fees for strong hybrid electric vehicles and the plug-in hybrid electric vehicles. Now, this news is a big positive for companies like Maruti, Honda, Toyota, and the manufacturers who are in the hybrid car space. In fact, Maruti Suzuki offers models like the Grand Vitara and Invicto under the hybrid car category. Now, this waiver is a bid to boost the hybrid car sales and to increase the market for luxury hybrid. And according to reports, Maruti expects a quarter of its overall sales to come from hybrid vehicles in the foreseeable future. But for now, Maruti, the Hyundai car sales in UP is quite low for now. Maruti sold around 1,000 hybrid cars in UP in FY24 versus the 16,000 cars sold in India. So this is likely to give a big push to Maruti, and on the back of that, Maruti is in focus today.
Well, certainly, but apart from that, Godrej Consumer is the next stock that we wish to highlight, and that's on the back of the Q1 updates. After the updates, Morgan Stanley has also come out with a note where they maintain an equal weight rating with a target price of 1,231 rupees. In Q1 FY25, they say that the numbers were actually in line than what we were expecting, what Morgan Stanley was actually expecting. The company reported EBITDA to grow in the double digits, as well as their organic volumes to see a double-digit decline. Indonesia volume is expected to deliver the high single-digit volume growth and double-digit constant currency sales growth. So all in all, a decent set of commentary versus in-line numbers coming in for Godrej Consumers, and the stock is also holding up well in today's trading session.
All right, coming to you, Osho, you have also picked up Godrej Consumer. Shrishti just mentioned the news coming in on the news flow on Godrej Consumer and the set of the updates that have come in. But on the charts, how is the Godrej Consumers looking for you?
Very good afternoon to both of you and all the panelists. Well, looking at the technical developments of Godrej Consumers, then it is in the cycle of higher highs, higher lows, has been maintaining this cycle from past 6 months, and currently it has taken a support approximately around 1350 odd levels and have started gaining traction. So from here onwards, I am expecting that the trend should continue on the higher end, because yesterday it has given a first instance where we were expecting a decent up move, but because of the report, there has been a subdued move in today's market. But we are still having an optimistic view in this counter, and I am expecting that in the coming period, approximately 1470 to 1480 kind of levels can be seen in Godrej CP, while on the lower end, 1360 to 1380 should be providing very strong support for this counter.
Alright, that's about Godrej Consumers, but Snehi, let's talk about CESC. Tell us why is this counter in focus today?
Well, absolutely, Srishti. So, shares of the Calcutta Electric Supply Corporation, which is CESC, rallied as much as 10% higher today. As of now, also trading with really smart gains, 6% higher. This is after the company increased effective tariff by 5.7% and started to levy fuel adjustment charge to its consumers. For June, this quantum is 40 paise per unit, and the increase in tariff should effectively cover CESC's incremental fuel costs and ensure complete cost recovery. This is what IIFL has to say. Accumulated regulatory assets currently at 3,000 crore to 3,500 crore will be gradually recovered with regulatory approval, and from the stock's perspective, this is a significant development, and this is something that IIFL has pointed out for this stock. So on the back of this 5.7% tariff hike coming in, it's bearing well for the stock. The street is also taking it well, up 6% as we speak.
All right, coming to you, Osho, another FMCG name that you have picked out for us, Patanjali. But this particular stock, it hasn't really done much for the investors, even though Baba Ramdev says that they wish to hit the 1 lakh crore market cap. But tell us, what are you seeing on the charts for this one?
See, overall in Patanjali, in the last 3 trading weeks, there has been significant development from the zone of nearly 1400-1450 levels, and which has given a very strong double bottom breakout in this counter. Again, after consolidation near the zone of 1650, I am expecting that once it has retested the neckline of the breakout, so from here onwards, again, this counter looks positive to give a positive movement on the higher end. So for immediate term, I am having a target of nearly 1770 to 1780, but overall from medium term perspective, the counter looks quite positive, and I am expecting a target of nearly 1800 to 1900 kind of from medium term perspective. But for shorter duration, 1780, 1800 should be the target that one can expect from Patanjali.
That's about Patanjali Foods. But before we move ahead, let's have a look at the June AMP data as well. Just marking the flashes on the bottom of your screen, the industry has seen an outflow of more than 43,000 crores versus an inflow of 1.1 lakh crores, and the equity inflow has actually inched up to 40,608 crores versus an inflow of 34,697 crores. And indeed, the kind of run-up that we are seeing in the equity markets today as well, the Indian markets and especially Nifty 50 has touched its all-time high levels. The total AUM now stands at 61.2 lakh crores versus 58.9 lakh crores, with equity AUM also seeing a jump in this particular number. So that's about the June AMP data. But with this, let's move on, and sticking with the consumer space, Jinay, talk to us about Emami. Why is this stock buzzing today?
Well, so the company is buzzing on the back of brokerage note. So Citi have maintained a buy rating and have hiked the target price to rupees 900 from the earlier target price of rupees 650. Now, what they believe is that the improving growth outlook comes from macro as well as self-help initiatives. Now, the growth acceleration is something which will be driving earnings for the company, is what Citi believes. And they also not only see a re-rating in Emami, but in re-rating for the whole sector as well. And they have highlighted some key catalysts for the company, which includes strong growth in the sector, in the seasonal portfolio, recovery in macro-dependent brands, and margin expansions through their organized channel. If you talk about stock performance, then it was trading higher up about 5%, but right now holding on to the gains of about 3%.
All right, coming to you, Osho, you've also picked out Emami for us on the charts. Tell us a decent set of gains that this counter has given to the investors in the last 6 months. Tell us what are you penciling on the charts? What is the further upside for this one?
See, overall, this counter was into a consolidation zone from last 3 to 4 trading weeks, but today we are witnessing a very strong breakout in this counter. So I'm expecting, looking at the setup on the weekly time frame, which is a flag and pennant kind of a pattern breakout, so approximately 200 kind of points is expected to be seen from medium term perspective. So immediate target that one can eye for this counter is approximately 900, 880 to 900 odd levels, So this is the level that one can expect from medium term perspective. For short term, 820, 830 is the target that one can expect on the positional basis, short term basis.
All right, that's the fundamental as well as the technical take on Emami Limited. But with this, it's time to slip into a very short break. Don't go anywhere. We'll be right back to highlight more of the buzzes in trade right now.
Welcome back. You're tuned in to Market Fatafat, where we are telling you all the stocks that are buzzing in trade. So, well, let's get started yet again then. HE Infra is a stock that is buzzing in trade, and in fact the share price rose almost 4% in the early trade today. It is full of those gains. It's now trading with gains of 1.6% right now, but it is after the company signed an MOU with Ultra Vibrant Solar Energy to acquire shares or voting rights in the project companies. Now, the Ultra Vibrant Solar Energy has been awarded the new solar projects from Jodhpur Vidyut Vitran Nigam for around 83 megawatts, which is proposed to be taken over by the company. And on the back of this MOU, HE Infra is in focus today.
All right, that's about HE Infra. But on the technical front, Osho, let's discuss Avenue Supermarts. How is this stock looking on the technical front?
Overall, DMART is placed at a very critical zone of 4800 levels. If we have to see the weekly or monthly chart, then it is on the verge of giving a fresh breakout from here onwards. So I am quite optimistic in this counter and expecting that there can be a strong outburst that can be seen in DMART, and expecting a target of approximately 51 to 5200 in the short term period, because this being a very crucial zone and the kind of pattern that it is making, it is hovering above the 21 exponential moving average and is maintaining the higher posture. So I am expecting in the coming period there can be a strong breakout that can be seen in DMART for targets of nearly 51 to 5200.
All right, moving on, we are joined now by Anil K. Bijawat, who is the CEO of RAK Ceramics India, joining us on the show. Hi, Mr. Shrawat, thank you so much for joining us. Mr. Bijawat,
good afternoon.
Right, Mr. Bijawat, tell us, you are one of the world's largest ceramic companies. So, no one better than you to tell us how the industry has been, evolving over the last few years. What have been your demand trends, and, going forward for the next 5 years, at what rate do you see the industry growing?
See, last 10 years, if you see the last decade for the tile industry, whatever that has happened in last 10 years never happened in the last 6 decades. The kind of revolution that has taken place in this tile industry is phenomenal. It's not only in terms of sizes, it's not only in terms of formats, it's also in the types of surfaces. And to the extent that a company like RAK, we have come out with a tile which is translucent. You can, compare it with an onyx. So the technology has evolved to this extent that today I can say that any kind of surface can be replicated by the tile industry, whether it is wood, whether it is metal, whether it is a stone, whether it is granite, marble, you name anything. And from 3 mm to 30 mm, that is the bandwidth of the tile industry. So you can have slabs, you can have laminations. So I would say that if there is any need for surface covering, ceramic tiles, there is a possibility. And that is what is fueling the increase in the market, to the extent that today, even in India, the kind of work that has happened, today India has become number 2 hub for the tile industry worldwide. And the growth pattern that is happening, it is fueled by the housing sector's demand. So the growth I can see touching 2 digits. It has been, traditionally it has been about 8.6, something like that. But now with the kind of money that is going into infrastructure, the money that is going into housing sector, in the real estate sector, we can expect the tile industry to grow by more than 10%.
All right. Hi, very good afternoon, Mr. Bijawat. This is Shrishti also joining in. What we see that in India, how have you seen the demand shape up? Tell us more on this front. And off late, the demand for the tiles and the sanitary ware has been a bit muted. This is despite an uptrend in the real estate market. So why so? And when do you see this changing?
There is, when you see or when you speak about muted, I think it is more a phenomena which is seen by the organized sector companies. Otherwise, the tile industry has grown. You will see that in 2019, this industry was about 22,000 crores. But today, the Indian tile market is 45,000 crores with 19,000 crores exports. The exports have grown phenomenally. So I would say that there is a little bit of overcapacity in the tile industry for a short term, and then it is fueled by some problems which are being faced in the export markets due to this Red Sea crisis, Ukraine crisis, and fuel prices going up. So all those things have coupled to create a situation where the organized sector companies are facing a muted demand pattern. But I think it's a very temporary phenomenon, and the kind of funnels that our sales managers have for the coming next 6 months, I think the growth is going to be phenomenal in this industry.
Right, Mr. Bijawat. So then tell us, what is the competitive, or how is the competitive intensity within the the players in India? You said that usually the muted growth that we just spoke about was for the organized sector, but as such the tile industry is growing. But what about the competitive intensity in the space?
It is quite intense with 1,000 units working between Morbi and other places in India. You can expect the competition to be very intense, and in fact for companies like RAK, this competition brings in more possibilities for us to spend in R&D and do a lot of work when it comes to innovation, and which is the creed of our company. So we come out with the newer kind of products and very innovative products. Like I said, that we are one of the only companies right now in India who have launched a translucent tile. And of course, we have huge range of tiles when it comes to stone finishes, then marble finishes, granite finishes, wood finishes. So the muted part of the demand pattern which you mentioned is only a temporary phenomenon. And going forward, I think we will be growing at a double digit.
Another thing that we wanted to know is that you have clients in more than 150 countries. Now, how is India different to the global market? If you can give us some sense over there, that how are the Indian markets placed versus the other countries right now?
See, I look after only Indian market, so I would not be the right person to talk much about what is happening in the international markets. But definitely Indian market is different. It is growing at a faster pace. And of course, the requirements, the need, culturally, we are quite different from the, world scenario. So we think local, we think global and act local. So we have 3 plants in India. One is in Samalkota and 2 plants in Morbi. So these 3 plants make 90% of the requirement which is sold in India only. So I would say that definitely there is a difference. In the other countries also, when we go to any particular country, we have those product ranges which are local to those places. So I would say that there is nothing like, a uniform product range which sells everywhere. We try to improvise because this is almost a fashion product. There are different designs which are required. There are different patterns which are required. There are different surfaces which are popular in different places. So in all other places, that's how we operate.
Bijawat, thank you so much for joining us on the show today.
Thank you.
All right. We'll move on with all the stocks that are in focus, and I'll come to you, Junaid. HBL Power is what you picked out for us, and this stock is facing some bit of a pressure in the market today. Tell us what's the news flow here?
So the company had its analyst meet yesterday, and we have some key takeaways from here. So the company actually cut its revenue guidance for FY 2025. They are giving guidance of 2,100 crores for FY 2025 from the earlier guidance of 2,300 crores. Also on EBITDA margins, they are likely to see about 19% EBITDA margin range going in FY 2025. Now this is mainly because of the new tenders slowdown or delayed because of the general elections, and they are also expecting tenders especially from Kavach to likely kick in from second half of FY 2025. Now also company says that most of its R&D spends are now has been done, and it is expected to grow profitably going ahead. Also, if you talk about growth drivers, then company says that telecom battery segment is the key growth driver for the company, and this is because of higher demands, especially from the rollout of 5G and government's focus on BSNL. Also, companies aiming to convert the old highway diesel trucks into EV trucks using its motors and batteries, and on back of this, the company is right now trading with a cut of about 1.75%.
Alright, that's about HBL Power, but moving on, and Osho, once again coming to you, you have picked up Lemony Hotels. Tell us more, how is this stock placed technically?
See, overall, this counter is looking very positive. On the daily chart, it is hovering above all its exponential moving average and has also formed inverted head and shoulder pattern. So any breach or any closure above the zone of 150 should be acting very positively for this counter. And again, for short-term duration, I am expecting on immediate basis 5 to 8 points kind of a movement in this counter on immediate basis. So 154, 58 kind of a target that can be seen. But on a larger picture, one can definitely see a target of nearly 168 to 170 from short to medium term time frame.
Alright, Snehi, coming to you then. GM Breweries is the name that you've picked out, an earnings candidate, I believe. Tell us, what are the earnings looking like?
Well, absolutely, Ankita. Earnings candidate, and Q1 earnings season just round the corner with nifty companies coming at the end of this week. But GM Breweries has kick-started this season, and Q1 numbers, if you take a look at, they're looking rather decent, I would say. On a year-on-year basis, at least you have net revenue that has come in at 152 crore rupees versus 147 crore rupees, which is an uptick of 3.5% on a year-on-year basis. And this net revenue is net of the excise duty, so that's one thing to note out for. EBITDA has come in at 31.5 crore rupees versus 27 crore rupees this time last year, which is an uptick of 16% on an annualized basis. Margins have seen some expansion as well of 220 bits at 20.6% versus 18.4% year-on-year. And also net profit has come in at roughly 25 crores versus 20 crores last year, which is up 25% on a year-on-year basis. When the numbers came, we did see a sharp spike coming in the stock. Initially, the street was reacting well to the numbers, but this stock slightly under pressure as of now, down 0.8% as we speak.
Alright, that's about GM Breweries, but with this, it's once again time to slip into a very short break. Viewers, don't go anywhere. We'll be right back with more news and updates.